Hmm.
I'll start the webinar.
1 minute, ma'am.
Yeah.
Okay, let's start.
Webinar has started.
All right. Let's just wait for participants to join for a second and then we'll continue. Okay. Suswagatam, good morning, welcome one and all to this fortnightly market outlook webinar. I am Devarsh, I lead the prime research team, and along with me on this special webinar, on this special day, I have my colleagues Siddharth and Nagaraj joining. So let's first wish everybody the happy International Day of Yoga. Yesterday was also summer solstice. So a fantastic day to do this special session. Good morning, Siddharth.
Very good morning. Indeed, Devarsh bhai. Whether you take a deep breath on yoga mat or enjoy a little extra sunshine today is the perfect day to reconnect with yourself with all world around you.
Wow, good. Good morning, Nagaraj.
Good morning. Welcome to Fortnightly Market Outlook webinar.
Okay, so this is the agenda. First, I'll take you through the opportunity and the risk involved at the global markets, why we are bullish on Indian markets on the longer term, and also highlight the risk. Risks are more important right now. After that, I'll hand it over to Nagaraj. Nagaraj will take us through the outlook from the technical perspective. Post that, Siddharth will join and he will share his views from derivative angle. And then after that, we will look at the second part of this webinar, the second agenda, which is to put some spotlight on the opportunities which are available in the market. So without further ado, let's start. Is my screen visible, right?
Yes, visible.
Yeah. So to quickly tell you about the India story, we were about 13th largest economy in 2000, and gradually we are moving. We are now currently fourth largest, and we are heading towards the third. By 2035, according to some projections, India's GDP will rise to $10 trillion, and by 2050, obviously, we will be one of the largest economies in the globe. So that is the opportunity we are looking at. So why it is important that India is going to grow? Because we have been prudent. We haven't borrowed compared to the Western world like France, Germany, Italy, Spain. And that's why our economy is growing, because our money is not going towards the repayment of the debt. Our money is going towards the infrastructure and towards the development of gross fixed capital formation, which leads to the future GDP growth. Also, India is a young country. We are an old civilization, but young country. The dependency ratio is low, and because of this, our earnings are expected to grow. As earnings grow and inflation trend down, the interest rates are lower, the balance budget, the trade deficit, all these are helping investors to put money into Indian market. Domestic institutional investors are putting in a lot of money. The formalization of economy through help of GST is also getting a lot of resources in the hand of government, which is in turn building the infrastructure. The Indian diaspora, which is outside of India, is bringing in a lot of money, dollars into our country, which is helping us to narrow the trade deficit, and the services exports is also helping India's trade balance come down. So all these fundamentals are important, and that's why we are bullish on Indian market for the longer term. What are the risks? Obviously, Russia, Ukraine, India, Pakistan, Iran, Israel, all these geopolitical conflicts are a big risk for the market. On the US side, huge sovereign debt is a big risk. They tried with the help of Dodge, with the help of tariff war, but they are not able to get the resources. So US dollar is a big risk. Europe, they are also trying to come out of the recession. Emerging market and commodities are dependent on these larger economies, and that's why many countries are watching and waiting for these bigger problems to get resolved. Once this resolution is there, there will be a lot of new economic cycle will take off. Another risk is the high valuation. So obviously, because of this such a domestic huge flow, we are not very cheap, and selective stocks are only giving us opportunities. That's a risk. Opportunity wise, obviously, good monsoon, GST collection, rate cuts, mutual fund inflows, all these are giving us a lot of opportunity. We have reserves which are $700 billion now. So even if FDI and FPI flows are little tepid, we are likely to grow faster. This is the biggest benefit, I think. US has about $62 trillion of market cap compared to only about $30 trillion of GDP. So this is unsustainable. Longer term, this will not sustain. That means either they have to bring the GDP higher, nominal GDP, by making policies which are conducive to growth, or the money will move out of US markets. Whether US markets, cryptocurrencies, or anywhere money is invested in dollars, that will move out. And even if 10% of this money moves out, that will be a huge liquidity flow to all parts of the world, whether it is Japan, Europe, Asia, emerging markets, frontier markets, commodities. All this will benefit when money starts moving out. We have already seen this is the longer term theme which we have to track, and yuan is the currency which will tell us where this is headed. So keep an eye on Chinese currencies. Another thing is that the economy in Europe and in emerging markets are improving compared to the US. So economic surprises are coming down in US, while in emerging market and Europe, economic surprises are higher. That means GDP growth or the economic growth is going to improve in Europe, improve in emerging market, but deteriorate in US. So that means money can go out of it. Indian households are less invested in it. So do your asset allocation, do the proper planning, and opportunities are there to make money in Indian markets for the long term. Now I'll hand it over to my colleague Nagaraj. He will share his views from the technical perspective, and then I will bring in I'll come in at the end to share opportunities in the current market conditions. Over to you, Nagaraj.
Okay, thank you, Deshpande. Is my screen visible?
Can you to put it on the full screen?
Yes.
Yeah. Go
Okay.
ahead.
Okay. Right. Thank you. Friends, good morning. Fortnightly equity insights and spotlight on the market opportunity. We will discuss about the technical aspects of the market. Friends, what we can observe on the last sessions of the week yesterday in market made an attempt of upside breakout of the range movement. Previously, in the last three sessions, amid the geopolitical tensions, market was moving in a choppy trend. A smaller range movement was there. Suddenly, yesterday, market showed intent to break above the consolidation band of the last 2-3 sessions and place at the higher levels. What we can observe on the chart is the narrowing movement around 25,100, 25,200 at the higher levels, and the lower levels around 24,500. Market has been hovering over the last last 1 month, you can say, within a narrowing moment. Now, technically, whenever the underlying moves in such a narrow range, either it has to break out or a breakdown. But what is the scenario? Recently, we have seen some significant upside bounces from the lower levels around 24,500 odd levels, where market opened lower and witnessed some sharp recovery. After that, a small consolidation has taken place and market again moved up in the last session. This short-term development in Indian market, especially in Nifty, is indicating that market is not willing to come down. And even though the geopolitical tensions is escalating in the Gulf, Middle East, and outside, but market is showing some minor weaknesses, consolidation during this week environment, and when it have a chance and moved up sharply. This is a positive indication currently placed at the higher levels. Friends, this is the weekly time frame chart. What we can observe in the weekly is a broader range movement over the last couple of months on the weekly time frame chart. What we can observe after the formation of lower bottom somewhere around 21,500 a few months back, market has moved up substantially from there. without showing any reasonably downward correction as per the long-term charts. We have seen 1 week of downward correction here, but after that market has bounced back and moved into a range-bound action. The last 2 months market movement was more of a time-bound correction rather than any severe price-bound correction for the stocks as well as for the index, we can say. After showing a negative kind of a pattern, like a dark cloud cover type of a pattern in last week, actually it was indicative on the technically that market is likely to show at least 1 week of a decline in the subsequent week. But exactly opposite has happened. Market has bounced back strongly in last week from the lower levels and placed at the higher levels. Technically, whenever the price moves up from the lower range and places at the upper range with a strong intent, with a rise in volume, as well as the long candle pattern formations, it indicates that a higher possibility of breaking above the consolidation band. This is as happened in the past, there is a higher possibility that in the next 1 or 2 weeks, we could see some decisive upside breakout of this range. And technically, I reiterate that whenever the underlying moves above the range or below the range, the momentum takes the underlying to the sharply on the upper side. So I believe that once Nifty moves above, sustains above 25,200 levels, we could see some sharp up moves ahead. Friends, this is a monthly time frame chart. What we can observe a sustainable movement in the market over the last 2-3 years. What we can observe the downward correction in between. After that downward correction, market has rebounded in the next few months with a strong upside momentum. This is evident over the last 7-8 months, over the last 1 or 2 years, and this time also after showing a decline over the last in the previous 4-5 months. The market has bounced back very well in the last 3-4 months. So this long-term chart pattern is indicating that long-term story is intact for the market. We could see Nifty reaching 26,000, 26,200 and moving above. That is all possibilities open for the Nifty over the longer period of time, medium to longer period of time. In between, there is a hiccups of a minor consolidation or a smaller downward correction is likely in between. So the other sides of the markets are a broader market indices. We have seen some sustainable up moves in the mid cap and small cap segments, and this is the marked area where the broader market indices have taken some pause or a downward correction has happened in the both mid and small cap Nifty. Recently, if you look at the mid cap and small cap, that we have seen some consolidation. Even though we have seen some significant up move in Nifty on Friday, but the broader markets over the last 1 week was not that much. It was underperforming slightly with the benchmark Nifty. That underperformance indicate the healthy downward correction compared to the sharp uptrend what we have seen. Both weekly chart of Nifty small cap and mid cap is indicating the whenever the market has moved up from the consolidation, moved up from the range bound action or a downward correction, it has witnessed demonstrated a strength to move up. What we can observe in the long bull candles, we can see. But whenever Nifty, whenever this broader market has shifted into consolidation, it was compared to a smaller bound of corrections compared to the bigger up move. Exactly what is happening over the last couple of weeks is a minor consolidation, minor downward correction is taking place in the both mid and small cap segment. That means this higher bottom seems to have confirmed, and we are likely to see a sharp rebound in the mid cap as well as the small cap sectors in coming week, and that could give us an ample opportunity to create longs, aggressive longs, and selective mid and small cap segments over the period of time. So this Bank Nifty was showing some profit booking last time, showing a negative candlestick pattern of a bearish engulfing in the last week. But the Bank Nifty has not showed any follow-through, a weakness in the subsequent week and bounced back from the lower levels. The way it has bounced back in last week, it is indicating that the negative pattern development of the last week could be negated at the higher level once it moves about 57,050 at the higher levels. So the friends, the underlying trend of Nifty is positive, and market is showing some resilience during this rising geopolitical tensions between in the Middle East. And we have seen some good amount of upside momentum during this event on Friday. There's a clear indication that market is not willing to come down and place at the higher levels, place at the upper range, which is currently around 25,200 to 250. A decisive move, a sustainable move above 200 could take Nifty towards the next hurdle of around 25,650 levels, where the opening downside gap was there of the previous times when the market made a new all-time highs. At the same time, any consolidation or a minor weakness from here onwards could take support around 24,800 levels. Means any consolidation down to 24,800 is going to be a buy and dips opportunity. And even positional support is placed around 24,500 levels. As mentioned, a sustainable upside bounce back in Bank Nifty on Friday is signaling the chances of negation of the bearish pattern that was formed the previous week, which is a bearish engulfing pattern. A move about 57,050 is going to change the sentiment for the banking sector. That could take Bank Nifty towards the new highs around 50,000. Around 55,500 levels is going to be the support, and 58,000 and 57,050 and 58,000 is going to be the upside target to be watched for the Bank Nifty. The underlying trend of the broader market is very looking positive. Currently, they are showing consolidations. We are expecting this consolidation is going to be a buying opportunity at the lower levels, as happened in the past. And I'm expecting the broader market like mid cap 100 and small cap 100 is going to bounce back very sharply from the lower levels. Sectorally, banking, PSU banking, financial, realty, pharma, infra, automobile sectors are likely to outperform in the coming week. That's all from the technical side. Now, I would like to invite my colleague Siddharth Deshpande to talk about on a Nifty derivative fund. Over to Siddharth.
Yeah, thanks, Nagaraj.
Your screen is visible. Make in a full screen mode.
Yeah, it's now visible. It's in full
Yes,
screen
it is
mode.
visible.
Yeah. Yeah, thanks, Nagaraj. Welcome to the derivative webinar. Basically, I will be focusing mainly on Nifty, Bank Nifty, OI, IVs, and other parameters which we track in derivative. So this is a Nifty 5-day chart. If you can see, Nifty open interest has continuously increased from last Friday to this Friday, and it's almost risen by 4% with the price rise of almost 1.6% on week basis. So this suggests that there is a build-up of long position in the Nifty. And if you see the PCR is basically currently as was around 1.16 in this week, and it has risen from 0.89 level. So which is above one level, which suggests that there is a bullish indication. It's suggesting in PCR. So next is Bank Nifty chart. Bank Nifty is basically, you can see open interest has come down, but why the Nifty has Bank Nifty has risen by 1.3%, which suggests that there is a short covering in the Bank Nifty, and even their PCI is increased to 0.92 level from 0.73 level. If you can see the IV has also come down. In case of Nifty also, IV has come down, and the Bank Nifty also IV has come down from 17 to 15.7 level, which is suggests that there will be lower option premium in coming sessions. So this is Nifty open option data analysis. This is a PCR. So these are the lots. So you can see at around 25,000, there is a major call writing has happened along with the put writing. And Nifty is currently trading around 25,111. So next resistance lies around 25,500, where you can see almost 109,000 contracts. And next is in 26,000 level. So if Nifty sustains about 25,100, 25,000 level, then we can see a continuation of uptrend, which can go towards 25,500 level in coming session. So traders should watch that 25,200 where it will create a triggering short covering in the Nifty. Similar case with the Bank Nifty also. Bank Nifty is currently trading around 56 to 98 level in future. So 56,000, you can see a major put writing around 76,000 contracts, followed by 56,500, 50,007 level. So in coming session, if the Bank Nifty sustains above that 56,500 level, then we can see a short covering continuation of Bank Nifty, and there may be a fresh build-up also, which can head Nifty towards that 57,000 followed by 57,500. So all this, you can keep a stop loss of around 55,500 for all long position in the Bank Nifty, where the maximum put writing second is happening. Next is this is long to short ratio on index feature. You can see this rate in the Nifty chart, and basically the long to short ratio has come down from one level to 0.31 level, but still Nifty has managed to go towards that 25,100 level. So which suggests that there is a short covering is pending from FIS, which can further trigger the long built up in total Nifty, and Nifty might hit from the current level. So if you see the last week, it has come down from 0.31 level. So it has risen to 0.31 level from 0.20 level, which suggests that there is a short covering has started from the IFIS side. So overall, we can see that long build-up is seen in Nifty future in the last week, where the put call ratio has also risen from the oversold level of 0.89 to 1+1 level. We can see a put rating around 24,800 to 25,000 where which support lies. So traders should watch that 24,000. Traders should keep a stop loss around 24,800 level for the all long positions. FIs are aggressively buying in cash market in the last week. Even I just discussed that FI's net long to short ratio is still below 1. So if Nifty continues to move up, then they might go towards that short covering and that Nifty will rise from that current level. So immediate resistance is around 25,500 to 25,600 in the Nifty level where the call rating is happen. So traders should watch this level for the resistance level. And if the Nifty is able to cross that about 25,600 level in coming session, then we might see further short covering long build up and Nifty may head towards 25,800, 25,900 in coming sessions. Therefore, we keep a bullish stand for the Nifty for the coming week by keeping stop loss around 24,800. For the bank Nifty also, short covering was seen in the last week. So I think we can see further short covering of a long build up in the Nifty, bank Nifty also once it crosses that 56,000 level. And FI is also basically I already discussed. So for all the positions, you can keep a stop loss around 55,500 for the bank Nifty and resistance is lies around 57,000, 57,500. Over to you, Devarsh bhai.
All right. Thank you, Siddharth. Thank you, Nagaraj. Is screen visible?
Yes, yes, it is.
It's visible, right?
Yes, it is visible.
Okay. Okay. All right. So let's talk short term what has happened over the last fortnight, what has happened over the last 1 month. So as you can see on the screen, over the last 1 month, the international markets have struggled. Our markets have started outperforming. Over the last fortnight, you see that the markets are up anywhere between 1.5% to 2%, while Indian markets also doing the same, 1.1% for Sensex and Nifty 1.4%, mid cap and small cap are doing well. So basically, compared to the global markets, earlier fortnight underperformance is started. Either markets are performing along with the Nasdaq or Hang Seng, but other markets we have started outperforming. And the sectors, obviously the IT, realty, auto, these are the sectors which are helping the indices go up, while PSU, metal, capital goods, power and FMCG has underperformed. We feel that this trend is going to continue. So in order to capture the opportunities, we had Prime Research bring you a lot of opportunities, whether it is investment, trading or derivatives. And also we keep conducting various market outlook webinars. Over the last 5-6 months from the beginning of the year, we have issued 25 fundamental ideas in the form of pick of the week. Most of them have achieved their targets. So 16 have achieved their targets out of 25 pick of the week. None of them have closed in the losses. On average, pick of the week, the targets have come in 31 days, average holding period. And as designed, we keep about 12 to 15% for first target, 20% second target. So on an average, we are trying to get about 15-16% return per idea. So all these ideas, 16 ideas have given us about 16.8% absolute return, obviously over the last 30 days. And if you annualize, obviously it is much higher returns. These are the ideas. Some of them which have done fantastically well are Bank of India, UTI, Coforge, Zensar. Recent ideas have also started performing. So I would urge one and all to look at our pick of the week investment ideas. Apart from pick of the week, we also come out with various trading recommendations, whether it is derivatives, cash, or MTF, derivative strategies. And also we have started a new product called Small Wonders. So I would urge everybody to look at these products. Depending upon the risk appetite, depending upon your liking, you can use any of the products which we come out with. And to put some spotlight on the current MTF opportunities, there are markets are bullish, as my colleagues have pointed out that we are on a verge of a breakout. If breakout comes, some of the or most of the stocks will do well. Right now, selective stocks are doing well, and that in these selective opportunities we are bringing to you so that you can benefit out of this. So these are the 5 recommendation out of all the MTF recommendations which are open, which is clear in the range, buying range. These are the various stop loss and targets and potential upsides. All these reports have been issued on this date as mentioned on the screen. So you can go back to the app or the website or with the help of our customer service or relationship manager, look for these ideas, go through these reports, keep these stocks on your radar and participate and benefit out of the opportunities which is available in the market. Apart from 4 MTFs, we also have issued one consumer ETF recommendation, which is almost near the range. So if there is small correction, it will come back into the range. So these are the ideas I would like you to keep on radar and we will keep issuing more and more such opportunities across various categories, not only in the MTF, whether it is derivative, whether it is small vendors, or whether it is pick of the week. So focus on these opportunities, make the hay while sun shines. We are bullish on the market. We are on the verge of breakout. Invest, trade in these opportunities as we try to bring in more and more opportunities for you. Okay, so that's what we wanted to share. Now we have about 5 minutes to answer your question. So if you have any question, please put it into chat window and we'll try to answer as much as possible. US debt default, KG is asking, Ketan is asking about US debt default. So currently there is not a direct or a immediate threat of US debt default, but over a longer term, these are trends which last for longer, but at some point of time, if it triggers a risk averse environment, then it becomes imminent. So currently it is not a risk, but longer term, obviously, we have to keep an eye on what is happening to US debt situation. Short term, we don't think any risk is there. What is the fair value of Nifty? See, beauty lies in the eye of beholder. So something which is looking expensive to me may be cheaper to you. What is looking cheaper to you may look expensive to us. Aggregate earning level, Nifty is supposed to earn about 1300 rupees per share 2 years down the line to FY27. Markets are always forward looking. So if we ascribe around 20 times earning, that means that 26,000 kind of is the fair value for Nifty for now. If 1300 is going to become 1500 down the line, and if market gives more valuation, if more liquidity is there, there is no stopping. That doesn't mean that Nifty P cannot go from 20 to 25. If geopolitical risks are there, if there is any big accident happens, then this 20 can become 19, can become 18. So we have to be aware that we are trading around 20 times forward earning, which is at the near the higher range. So we have to be selective in opportunities, and that's what we are showing. Can you show? So MTF recommendations are carried in our daily file every day. We also share it with channel in our all social media forums. All the reports are available. Please go through them and you will be able to see those.
Nagaraj, YouTube user is asking, what about FMCG sector? Chinu Thomas has asked that. What about FMCG sector? What will they underperform or outperform?
Recently, FMCG has worked as a defensive sector in the past, and currently, FMCG is not doing that good. It is moving in a range bound. As a sector, we can see it is showing range bound action placed at the support levels. I think some more consolidation is likely for the FMCG sector as well as FMCG stocks, and we could see eventually heading higher from the lower levels.
Devarsh bhai, one more user is asking about defense stocks, whether it will underperform or outperform. Vishal is asking the same on the YouTube.
Longer term, defense is going to be a big theme. Defense exports is becoming a bigger theme, but currently valuations are very steep. They have performed well. We, as a part of our, because we did cover a couple of shipyards and BEL, BEML as a part of our investment ideas in the past. They have achieved their targets and they are trading at expensive valuation. So we'll wait for the correction, but longer term, we do feel that defense is a good theme to back for a longer term. 1300 rupees is the expected EPS of Nifty by 27. Somebody has asked. Longer term, we are bullish on power All our research reports are available on HDFC Securities app. It is available on our website. Please log in and go to the research section. You will be able to see all the reports which we publish. So that's what we wanted to cover this day. I think I've answered most of the question. If you have any other question, you can always get in touch with us through our relationship manager or through our customer service. We'll be more than happy to answer any queries which are there. So thank you one and all for joining. I hope it has been useful. As to summarize, we are at the cusp of a breakout if nothing untowards happen in the geopolitical arena by Sunday evening. We hopefully should get some traction in the market in the week to come, Monday to begin with. And if we break out from 25,200 levels, hopefully we'll move towards 25,500 and beyond. So a lot of opportunities are available. Keep one eye on geopolitical risk. Provided that nothing untowards happen, we are headed higher. And let's make some money. All the best. Thank you, Nagaraj.
Thank you.
Thank you, Siddharth, for joining. Have a fantastic weekend ahead. We can close the webinar.